Hello, everyone. My name is Courtney Moore. I am one of the audit principals at Lauterbach and Amen, and I'll be taking you through a webinar regarding our GASB statement number 101 related to compensated absences. So for starters, we have the implementation dates. So GASB statement number 101 is effective for fiscal years beginning after December 15th, 2023. So with that in mind, implementation will be effective for the following typical fiscal year ends: December 31st, 2024, April 30th, 2025, and June 30th, 2025. Just to provide a brief overview on GASB statement number 101, it provides guidance on how governmental entities should account for and report compensated absences. Compensated absences in general are absences for which employees will be paid, such as vacation, sick leave, and other types of leave. So, what is the purpose of GASB number 101? Well, we have a couple important reasons for this new standard. One of them being improving consistency. So, we want to ensure that all governmental entities account for compensated absences consistently. With that in mind, this purpose of GASB number 101 is also to enhance transparency and provide clearer and more comprehensive financial information regarding compensated absences. The statement also gets a little bit deeper into ensuring that the government is reflecting true costs. So we want to ensure that true costs are being reflected with employee benefits within your financial statements. And with all these in mind, the goal is to improve comparability between other types of governmental entities because this statement is standardizing the accounting for compensated absences. So let's get started. How do we know when a liability needs to be recorded? So a liability will need to be recognized for any type of leave that has not been used at year end, as long as all three are true. Number one, the leave is attributable to services already rendered. Number two, the leave accumulates, so it carries forward from the reporting period in which it is earned to a future reporting period, in which it may be used for time off or otherwise paid in cash or settled through non-cash means. And number three, the leave is more likely than not, so more than 50%, to be used for time off, paid in cash, or settled through non-cash means. So remember, all three of these must be true in order to consider the recording of a liability. So what are some leaves that are subject to measurement under GASB number 101? A couple examples include vacation leave, paid time off, holiday leave, but only if the date is up to the discretion of the employee. So these would be floating holidays. And sick leave. So only time that is accumulated and likely to be used. There are a couple types of leaves that are excluded from measurement, and really these are sporadic. So, occurrence of a sporadic event that affects only a small portion of employees in a particular reporting period. So, it makes it a little bit difficult to record that liability. So, things like parental leave, military leave, jury duty, etc. Those would all be considered excluded from measurement under GASB statement number 101. So when it comes to getting ready to determine what that liability is going to be, we want to start with figuring out what pay rate we use. So when booking the liability, the government should use the current rate of pay in effect as of the balance sheet date. And Employer paid taxes and other salary related components should be considered. So ultimately, what your employee's pay rate is at the date of the balance sheet is what you would use. But it's also important to take into consideration that if leave is paid out at 50% of the final salary, that's the amount that we are using. That is the rate that we will use to calculate the liability. If there are changes in future periods due to cost of living adjustments, increases in wages, things like that, those are recognized in the period of the change. And items like Social Security and Medicaid should also be included when calculating this liability. Sick leave is something we're going to dive a little bit deeper into because it is probably the biggest piece of change from past practices with the new GASB statement number 101. So, sick time that is earned and accrued by employees but not paid out upon termination needs to be assessed and estimated for accrual. So note that the estimate should be amounts that are more likely than not, so more than 50% likely to be used as time off in future reporting periods. We recommend using historical use trends to calculate the estimate, which we'll get into in a minute. And it's always important to ensure you're clearly documenting the approach used to come up with these estimates so that it's easier to estimate it on an annual basis, knowing what you did in the past, and also for disclosure purposes. So on the last slide, we had listed two types of ways to calculate sick leave. One of them is related to days used. So this would be based on how the current workforce has used sick leave in the past. You would choose a representative sample of employees to determine the number of sick days used in past years. From there, you'll calculate the average number of days used over the period selected. So don't forget salary related payments as well, including Social Security, Medicare, 457B plans, etc. So with the dollars paid approach, we're kind of looking more at what has the government done in the past when an employee has been terminated and been paid out. So the last slide talked about what are your current employees doing when it comes to taking sick time. And this is more so what has the government done in the past. Either of them are good options to use. Just make sure you're clearly documenting what you do use. So in order to do this, you'll choose a representative sample of former employees to estimate proportions of leave time used and leave time settled as cash at termination. So that will kind of help you back into what the liability would be for sick leave. There are a couple disclosure requirements when it comes to the new GASB statement number 101. This goes back to, the purpose of this new statement, like transparency, consistency, and comparatively showing your sick leave and compensated absences between different governmental entities. So we will have to provide general information. So a description of the compensated absence policies, including types of leave covered under these policies. Of course, we'll have to show the accrued compensated absences amount. So this would be the total amount of compensated absences liability recognized in the financial statements. This would ultimately show a breakdown of short-term and long-term portions of the liabilities as well. A reconciliation of the beginning and ending balances of compensated absences will need to be shown. And if there are significant changes in the liability amounts, reasons for these changes, like a change in policy or change of rates, would need to be disclosed within that piece as well. A description of the methods and significant assumptions used to estimate the liability will need to be disclosed. And information on the amount of compensated absences expense recognized will need to be shown. So ultimately, when you're adjusting this liability, the other side of that entry is going to be expense. So the expense recognition will need to be shown as well. So what is the impact on the financial statements? Well, starting with the balance sheet impact, of course, the liability is going to be impacted. So ultimately, we would expect to see an increase in liability on the balance sheet, which would be both short-term and long-term. It will be classified into those two separate pieces within your balance sheet. Note that short-term is considered within 1 year, and long-term is anything expected to be paid beyond the 1 year mark. Also, on the balance sheet side of things, equity will be affected. With an increase in liability, we would typically expect a reduction in net position. From an income statement standpoint, as I mentioned earlier, expense recognition will be impacted. And ultimately, if there's an increase in a liability, there will also be an increase in expense. The types of expenses will vary. It really includes vacation pay, sick leave, and other forms of compensated leave. And as a reminder, these expenses will be recognized in the period in which the employees earn the benefits, regardless of when they are paid. Does the liability get recorded? Well, with our governmental funds, which are modified accrual basis, they are recorded only to the extent that they are expected to be liquidated with expendable available resources. So only the portion of the liability that is due and payable within the current period would be recorded. Note that it could have budget implications in the governmental funds, so it's really important to make sure we're accurately assessing what the short-term amount of the liability is going to be, so we know how the income statement is going to be affected. From a full accrual basis with our government-wide statements and our proprietary funds, there will be no change. The liability is fully recognized, both the long-term portion and the short-term portion. So since the short-term amount is a little bit of a hot topic with this, especially with our governmental funds, let's talk a little bit about how to determine the short-term amount. So we must use a method that is systematic and rational based on the best available information. So there are a couple options for measurement. So when it comes to historical usage patterns, take a look at how your current employees have been utilizing this leave within the short term. So how have compensated absences been used in the past? You could also take an accrual method. So what is the amount of leaves that employees will accrue and use within 1 year? You could also take a look at leave balances. So if you take a look at each employee and what their leave balance looks like, you can determine how much of that balance is likely to be used within the next 12 months. So just a couple implementation steps and practical considerations to be aware of. First things first, we're going to want to assess our current policies. So review your existing policies and procedures related to compensated absences and identify areas that need to be adjusted. Really make sure you're looking at all policies to ensure all classes are captured. Gather data on accrued compensated absences, including vacation, sick, and other types of leave. And then from there, you can start to take the approach of determining what is and is not required to be reviewed for implementation and determine what your pay rate is going to be, et cetera. Consider revising policies to align with the requirements of GASB Statement Number 101. This could include changes to how compensated absences are accrued and reported. And of course, inform your employees about the updated policies and what their implications will be. Consider modifying accounting and payroll systems to accurately track and report compensated absences, especially when it comes to the short-term due in 1 year amount. It's important to have accurate historical data to go off of, and it'll only get easier year over year if you have that historical data to review. And then establish internal controls to ensure the accuracy and completeness of compensated absences data. Just to wrap up with some resources and support, so you can always take a look at GASB publications at www.gasb.org. And the news page of our website will always have some training information, including this webinar and a couple other training documents that we will post out there to help with recording sick leave and short-term leave as well. And of course, if you have any questions, feel free to contact any of us that are listed on this slide, or feel free to reach out to your main contact at Lauterbach and Amen. We're always happy to help walk you through the implementation of these GASBs and ensure that you're taking the proper steps to have that liability ready to go. Once again, thank you so much for joining us. And like I mentioned, feel free to reach out to any of us if you have any questions.